FirstRand operates as Rand Merchant Bank, First National Bank and WesBank. FirstRand has a market cap of 170 billion rand, a dividend yield of 3.4% and a price to earnings ratio of 13. They've also just been voted as the most innovative bank in the world.
Yes, everybody's been carrying on about that. Look, that's all about the
Not
iPad
you, of course.
and using your home thing, because clearly they want to get the customers out of the branches. So that's the future, and Michael Jordan and his colleagues have been very outspoken on that, and that's great. I've been saying, though, for a while, the reason the share price has done so well is because they finally, roundabout there in the middle, sorted out their corporate structure. Prior to that, there was Rand Merchant Bank, which owned part of FirstRand, which owned part of Rand Merchant Bank.
All very
which
incestuous.
owned part of Remgro, and Remgro owned part of all of them. So finally, that's gone. So if you buy FirstRand now in the market, you know you're getting 100% of First National Bank and of WesBank, and that's good. You know, it all makes sense, and you can take it forward. And I think the market loves that. That's what's given it the visibility.
Jonathan, can it go higher than current levels? And of course, that's the big question that everyone is asking.
Sure. I mean, look, it could go higher. I mean, I think it's quite expensive. I mean, if you look at Standard Bank, it's price to book of 1.6. This is price to book of 2.6. Obviously, higher ROEs, 20% with Standard Bank at 14. It's just FirstRand. Everything's been going well. Purple patch. I mean, they've had their Steve campaign. I mean, we've all heard the Steve campaign, and it's worked really well.
Love or hate him, Steve is prevalent in everyone's lives.
It's worked really well. So, I mean, you know, what more can they do? If you look at WesBank also doing incredibly well. Everybody buying new cars, they're financing them. Really, they're getting their lion's share of that market. And hats off to management.
You're almost
really
saying, though,
delivered.
it's as good as it can get for FirstRand. That's where we're going.
I think so. I think it's as good as it can get.
Paul?
Look, I'm positive about the market, both for their retail services, which is what we've been talking about, but also for the corporate and investment market. Again, you know, they are intertwined with the modern
I'm glad
economy.
you could get it out.
All this kind of financing stuff. Businesses, obviously, we know in South Africa have got huge positive cash balances. That means that they haven't really been investing that much in capex. If this bright new future I keep talking about is upon us, companies are going to start investing again, and they're going to need funding and facilities in order to do that. So I'm positive about that too. I just think the question is, have they finally gotten out all of the funnies? You'll remember a couple of years ago there was a team based in the UK that was buying and selling financial services stocks. That sort of thing now we don't do anymore.
There's one thing that I do want to throw forward to, having just interviewed Sizwe Nqasana and spent some time on their 2012 results. They seem to have got this loyalty thing right. Just to show you how big the loyalty program is in FirstRand's life, they pay out R500 million, well, they did in 2012 on eBucks. And if you look at their fuel rewards, they're paying out about 11 million rand a month. So that shows traction on the loyalty program front.
Customers love that.
Customers love it. Hot or not on FirstRand?
I just think from a valuation, I think the company's fantastic, but just from a valuation perspective, it's gone too far too quickly, so not hot.
Paul, hot or not?
I'm going to give it the hot. I've been wavering in recent months discussing the stock, but I'm happy to go with the hot now.